Household debt soars and seniors are getting squeezed by inflation and market volatility. Welcome back to the Industry Leader Update. Older homeowners are getting hammered by a 1-2 punch, with inflation approaching 10% and with record declines in stocks and bonds in an increasingly volatile market. And as a result, many older Americans may be racking up more consumer debt. On August 2nd, the Federal Reserve Bank of New York issued a press release, and it notes that household debt has reached an unprecedented $16 trillion in the second quarter of 2022. Mortgage balances increased as home purchase prices skyrocketed. That makes sense, but what's more concerning is the 13% cumulative increase in credit card debt, the largest increase seen in over 20 years. The second quarter of 2022 showed robust increases in mortgage, auto loan, and credit card balances, driven in part by rising prices. While household balance sheets overall appear to be in a strong position, we are seeing rising delinquencies among subprime and low-income borrowers, with rates that are approaching pre-pandemic levels. Delinquencies for debt holders who are over 90 days delinquent are increasing substantially, and while that change may appear to be minimal, it's the long-term trend we must be mindful of. For example, credit card accounts that are over 90 days overdue increased from 3.04% of credit card accounts to 3.35%. Now that's a 10% increase in just 1 year, and that number is likely to increase until inflation is brought under control, and it would be accelerated by any upswing in unemployment. Now, while serious mortgage delinquencies are still at historic lows, the increase of 0.34% of mortgage loans over 90 days late to 0.44%, that's a 29% increase in just 1 year. And while the increase in delinquencies for all debt increased modestly, the number of future mortgage defaults and foreclosures, that remains completely unknown. And here's why: the continuing COVID-19 emergency declaration. Since January 2020, the United States has been under an emergency declaration that has far-reaching impacts on debt collection, mortgage forbearance, student loans, and in some cases, mortgage loan modifications. The CFPB's website reads in part, "If you have a home loan that's backed by HUD, FHA, USDA, or the VA, your mortgage servicer is authorized to approve initial COVID hardship forbearance requests until the COVID-19 national emergency is officially over." That's the key phrase. Now, previously, that deadline was September 30, 2021. If history is any indicator, it's likely the COVID emergency is going to go past September 2022. And it should be noted that there's no proof of hardship required. A homeowner simply has to tell the servicer that they're having a financial hardship because of the pandemic. That's it. And that means that we could have an untold number of federally backed loans that could go into default once that emergency ends. That surge in foreclosures would significantly increase housing inventory or supply. Also, it would have a direct impact on home values. And all that leaves today's senior and older homeowner in the direct path of an economic hurricane. The LA Times reports inflation is driving more retirees back to work. Seniors for Hire, an employment platform for older workers, reported a 20% surge in applications or applicants since March 2022, and a 12% increase of employers advertising on their platform. The good news is older homeowners with substantial equity may have the ability to tap into their home's value for some economic relief. Unfortunately, today, most older Americans are reluctant to even consider such an option. However, if inflation continues to increase and market volatility continues, they may be forced to reconsider their earlier reluctance in the face of economic reality. Now, what are your thoughts? Leave your comments in the comment section below. And also, if you could share today's episode on your social media platforms, we appreciate that. And one way you can support us on the YouTube algorithm is to hit that like button. We put a lot of effort into these episodes each week. We want to bring you fresh and relevant content. And the way you can thank us is to hit the like button and subscribe. Also, don't forget, each and every week with no cost or subscription required, you can listen to the nation's only weekly podcast for you, reverse mortgage professionals, and we will give you news, commentary, and analysis on HECM World Weekly. Apple users can listen and subscribe on iTunes. That's a wrap for this week. Thanks again for joining us, and until then, happy originating.